Earnings. Asian Paints reported operationally strong quarter in Q1 FY24. Company reported double-digit volume growth. Mangalam Maloo caught up with Amit Syngle, who is the MD and CEO of the company, began by asking him about the quarter gone by and about factors behind strong consumer sentiment.
We saw very, very clearly in this quarter which has gone by, which contributed to a healthy double-digit 10% growth in terms of what we have seen. One is we felt that the rural markets have kind of really bounced back a little from what we were seeing them in Q3 and Q4 to that extent. In fact, our growths, if we see in the T3, T4 cities, have been almost equal to T1, T2 to that extent. So I think it's a very positive sign for at least our industry in terms of what we are seeing in terms of going forward, where this is something which possibly augurs well as we kind of go ahead. The second area which we are seeing strongly is that the whole area of the institutional projects business, which is the B2B business, is kind of doing extremely well. We have seen an uptick with respect to the construction which is taking place. As a result, the builder segment has seen some good growths. And also, I think the government spending is on, which kind of gives us a good kind of impetus as far as the infrastructure projects are concerned. Similarly, we are seeing expansion from industries and brands going forward, which is also kind of giving an uptick with respect to the factories segment. I think these are very clear indicators which are coming, which are definitely kind of influencing the demand in the market.
What stood out during the quarter was your operational performance. There was a 500 plus basis points improvement in your gross margins. The EBITDA margins came in at 23%, much above your guided band of 18 to 20% itself. Just wanted to understand, despite that, what made you cautious in your commentary, where you've guided for 18 to 20% margins and gross margins also much lower than what they are at right now. What is it that worries you?
So overall, what we see is that I think the margins dependency with respect to how the raw material prices pan out is very, very strong. You've seen in the last few quarters when we had higher inflations that the margins definitely dipped down to something around 16-17% to some extent in some quarters. So overall, what we are seeing is that there is a little bit of an uptick with respect to certain raw materials. We are seeing crude prices going up. The rupee-dollar volatility continues to that extent. So we are going to wait and watch the market in terms of how the raw material prices stabilize and not want to kind of really jump the gun at this moment to that extent. Secondly, what we see is that we have very two important quarters coming ahead. And there we are looking at definitely upping the spends with respect to both above the line and below the line to stimulate demand in terms of going forward to that extent, which also would be definitely kind of, eating into margins to that extent as we kind of go ahead. Given the fact that there are larger plans and we see uncertainty with respect to a little bit of the macro environment to that extent, I think we are waiting and watching in terms of what is there before we want to really, revise any of the guidance in terms of what we've given in terms of the margins.
HUL themselves spoke about increasing competitive intensity, specifically coming in from, local players as well in some geographies in the mass categories. Have you seen a rise of competitive intensity from players who had earlier gone out because of higher inflation?
Actually, no, because for us, I think the bottom of the pyramid segment, which we see is fairly huge and the kind of potential there is fairly high. I think a lot of measures we do in terms of getting the unorganized, brand consumer to the organized brand at a point of time in terms of looking at some of our smart emulsions and smart products in terms of what we have. In fact, we have seen an uptick with respect to that kind of a demand which is happening, which gives us reason to believe that possibly the gain from some of the local players kind of continue for us to that extent.
What's your outlook for the entire year when it comes to the top line and specifically the festive season, because you have a longer window this time?
Yeah. So overall, we have maintained that if you look at the last 12 quarters or so, the whole area of looking at volume growths aggressively has kind of continued from the brand, and we have seen that kind of evidence in terms of all the kind of outcomes in terms of the last quarters as well. We are seeing that definitely we would like to maintain a double-digit kind of a trajectory as far as this year goes to that extent, aided by, obviously, I think, a good festive season in terms of which we are seeing, given the fact that it is longer and now we are seeing possibly good monsoons, which would kind of improve the sentiment in the rural markets as well to that extent. So therefore, I think both from the point of view of we are looking at good kind of growths in Q2 and Q3. And in terms of the year, we maintain that the double-digit volume growth should come in definitely.
There was weakness in your home care business this time around. You had a target of 8 to 9% of sales coming in from this business in the medium to long term. Currently, it's 3 to 4%. What's the plan here?
Yeah. So when we look at the overall home decor business, I think we've made large strides with respect to our retailing footprint. We have seen now 44 beautiful home stores coming across the country. Newer categories have been introduced. Our lighting business, which is the white teak, which we had made an acquisition, and the weather seal business of doors and windows, both have grown at a very, very strong pitch. Our fabrics business, which is doing extremely well, and we are literally kind of looking at very, very healthy growths coming from that business as well. So overall, I think the footprint in that has been strong going forward. The bath and the kitchen business have been a little bit slow in this quarter, given the fact that last year we had very, very huge price increases basis there to that extent. We are hopeful that that should turn around as we kind of look at Q2 and Q3. So overall, I think the impetus with respect to the overall home decor business continues to be strong. We are at about 4% contribution to the overall deco business in terms of what we see. We had promised that by the end of March 2026, this business should kind of really be at around 8 to 9%. I think that promise still holds.
All right, and final question, and this time we never let you go without asking this with regards to the looming large competition coming in. You've been increasing your retail footprint, you've been increasing your capacity, backward integration as well. But as we come closer to newer capacities from larger competitors coming on stream, I just wanted to understand if your team on the ground has seen any change with regards to communications that you're getting from distributors, the aggression that is expected from larger players on the ground. Is there anything that you're witnessing there?
First of all, I don't think so there is anything looming about it to that extent. Okay, we don't see any traces of that at all with respect to our strategy in terms of initiatives which we are planning and how we are going. We have seen competition in the past, and I think in the last few months we have seen a lot of new players which have kind of come in. We have seen some aggression from a larger capacity coming in the last 3 to 4 years by certain Indian players as well in terms of what we have seen. I think we are very strong with respect to seeing that we want to kind of work around increasing the brand equity going forward, kind of really utilize our supply chain strengths, look at innovation coming right from the front to that extent, take our service footprint in a very, very strong manner ahead. And I think we are very clear that a lot of these initiatives, the competition doesn't have an answer to. Leave aside new competition, I think even the existing competition doesn't have an answer to. And therefore, we are pretty confident that when we kind of look ahead, we have our own trajectory which we need to kind of carve out, and we will definitely look at possibly delivering what we have in sight for us as we go forward.
Okay, so that's the management of Asian Paints, confident about the festive season going forward and targeting double-digit volume growth as well for FY24. That's the stock steep valuations, as you can see, over